traders, it's Graham here from Kilted Trading, and it's feeling great to be back. I know it's been a while since we've done a YouTube video, but we're back. I've been trading a lot, so I've been learning some new things and working on a few new indicators. One of those we will show you, which is called the Kilted 50, which is part of another strategy I've been trading and looking at. But first of all, we'll have a look at this stock here. I did some analysis on this one fairly recently. It's an Australian energy company called Viva Energy. I did some analysis for a colleague of mine, and he picked up, it was a really good trade actually. He alerted it to me and I did some analysis for him, so I thought I'd take you through that. But more importantly, one of the things I was wanting to, show you in this session is how I go about my analysis in terms of breakdown of when I look at a chart. So one of the things I've been looking at recently is something called Renko bars. Now, they've been brought to us by the Japanese, similar to candlesticks, and it is a fantastic way of picking up your key levels on a chart. Some charts you can open and it's not that obvious to the untrained eye to where some of the key levels are. So if you're fairly new to trading, or you want to find out where some of the key levels are and simplify things a bit for yourself, Renko bars is something that you probably should be having a look at. So what I do is I actually have a split screen here where a lot of the time I'll bring up the Renko chart, which looks something like this. Now, this chart here with the Renko bars is basically the exact same chart as what you're looking at here. So up above, I am using bars, a bar chart. We've got the open and close. The open is on the left hand side. The close is the bar on the right hand side. So fairly easy. I use those. I find it quite a lot easier to spot divergence on a chart, which is something we will start to talk about a little bit more on the channel. But yeah, I use the Renko bars to pick out key levels, and it's really, really good at doing that, because what it does effectively, in short, is it looks at pure price action, and what that means is it's going to only paint a red bar or a blue Renko bar if the price changes enough. So what you're trying to do is see where there's enough volatility or enough of a change in price to paint a new bar. If there's not any sort of enough of a change in price, a new bar won't be printed. It's as simple as that. So what it does is it takes a lot of the noise out the market, as you can see. Now, the settings I have are people have different settings. You can do your own sort of analysis. There's heaps of YouTube videos on breakdown of Renko itself and the various settings. What I use is something that's market adaptive. So I use a setting called the ATR, which is average true range. So if you just come in here on settings, I'll show you what I use. So when you click on a chart, you can change to a Renko chart by clicking on this little icon here. So I'm using bar charts on the chart above. On this one, I'm using Renko, and this is the setting. So when you click on Renko, you basically get this option here. So I choose an ATR. The other one's this traditional one. I choose ATR, which is market adaptive, and I choose a period of 14. So 14 periods based on the time frame. It does change in terms of what time frame you're looking at. So in this case, I'm looking at a 1 hour chart. I've got my up bars here, which is bright blue, as we like to use in Kilted Trading, because I'm colorblind. So I find it much easier to read with the blue and red. And then we've got something called projected bars. So it also it's quite nice because it'll actually project with it thinks price is actually going. I don't use Wix, so I untick that, and that's pretty much it. so it's really easy to set up. Now the other thing I do is I actually put on an EMA 13. You can choose your own, but I use a 13, which I think is a pretty good exponential moving average to have on your chart, and we'll show you why as well in a second. But what I've done here is you can see I picked out some key levels, so I'm seeing that's a fairly good support zone. It's come down here, bounced off it, come down here, bounced off it, then it's broken through, come up, retested it. So support has now become resistance, but it's shot through it here. Bit of consolidation, you can see I've tested it again, come up through, bounced, and it's come straight back down. So this is a pretty key zone here. So I've drawn a line there, and so on and so forth. I've gone up here, another level there, so on and so forth, and we've gone up. So I'm seeing the next key level is probably around here. You can see why it's gone up, tested it, come back down, broken through it there, bit of a false break, and then it's come straight back down all the way down here, came back, retested it again, so that's definitely a key zone. So I've drawn a line here, so I'm expecting this to be I guess an area of interest. I've drawn a few more lines up above, obviously the all-time sort of high here in March of 2019. So if we, the thing that's really nice about TradingView, anything you draw down here in terms of lines and including the chart above, sort of superimposes itself up above. So we will have a look at where we're at. So what this does is give you your lines, your key levels, and then you can start trading using whatever strategy you're trading. Doesn't really matter. Different strategies working in different markets and different market conditions. What we've done here, if actually we take this one off, we can actually see it a little bit clearer as well. See how these key levels that have actually played out really nice on the chart. So for the untrained eye, it's a really good way of picking up the key levels that you should be paying interest to on your chart. I'll just put that back on. So it's just a really easy, very simple way of picking out the key levels on a chart. So one of the if we just break this down a little bit further to show you what we did with Viva Energy is we looked at the key levels. I could see price was actually rising here, so I've drawn a trend line, an uptrend line here. And then lo and behold, we see we've got what looks to be a bit of an ascending triangle. So with the ascending triangles, you really don't want them breaking over here. It's sort of null and voids the pattern a little bit. You really want to see it breaking out exactly where this one has done here actually, to give you the pattern that you're looking to trade. And the way we trade it is we look at the 2/3 of the way back down. We draw a line from the bottom to the top, and then we project that up to where the price is actually broken this key level, sometimes called the neckline as well on patterns. So it's broken this sort of neckline or this sort of main resistance zone. We project that up, and it's projecting that we go to around that $3.40 mark at the moment. Now this actually hasn't proofed to another level. What's nice with patterns is if they proof to a level that was maybe a previous sort of supply zone where prices actually come down from. In this case, we've got price here from 18th of July 2018 in TradingView, but it's certainly looking as if it's going up. But you can see here, and this is the other key point here, even with this 50 moving average, you can see that price is getting away from the moving average quite a bit. So this is a fairly extended move. We've got what we've called angulation away from this 50 period moving average. Now we know this is a fairly slow moving average, but you can see anywhere it's actually extended quite a bit away from the moving average, as price typically does. It comes back like a rubber band. Like here we've got a fairly large down move, but then it's retraced back to the moving average, in this case a 50 period moving average, which is the indicator I've been looking at fairly recently. And what it does is, we'll just probably a nice segue in to talk about it, is what it's doing is it's a 50 period moving average, but what it's doing is it's actually measuring the slope of the line, which is I guess a bit of an indication on how strong the price action is. In this case, we had this down move, so we're looking for shorts. So when it goes red, you're basically seeing price under the 50 period moving average and going south. Opposite true is true here. When you see the price going up, we're seeing the blue line here. Now you might be asking, when we have this grey line, what that's representing. Now that's basically representing, if we can draw it just on the chart quickly, that's basically measuring a period of consolidation here. So whenever that happens, it's basically no trade. So and normally the 50 period moving average would be fairly flat. Like this period here, you can see we've been going in between the blue and the grey. Bit of a period of consolidation there. Again, here we've had a bit of consolidation as well. So we're looking to get in these sort of levels here. So that is the kilted 50. So yeah, just a very quick one this week. Obviously, my expectation on this one for anyone is actually looking to trade it. Probably a little bit late to get in now. It's going up here. What I would expect to see is some sort of retracement back here, and then maybe a further move up based on looking at the current sort of chart. And if we're playing this pattern, it'd be a nice pickup if we're back. If we come back into this level here and zoom off here, then that would be probably a nice level to pick this one up and let the pattern play out. So hopefully that was useful. It's great to be back. This is probably the first of a few weekly sessions coming up. As I say, I have been trading. Life has got busy, as it does for most folks now that we're out of lockdown, which is terrific around the world. So as always, as I say, look after yourself, look after your families, and a good trading week ahead, folks, and speak soon. Thanks for listening.